Everyone, it's Erich Reimer. I'm talking to you all today from Black Monday as the Dow today has dropped over 2,000 points amid a combination of coronavirus spread as well as a steep decline in the price of oil of over 20% or so due to a OPEC dispute and Saudi, Russia, etc. price war. Amid all this, I wanted to discuss why energy prices and the energy sector has such a big impact on financial stocks. Amid the many sectors that fell today, all of them fell pretty much. However, one thing that many people may have noticed, even amid the recent general coronavirus fears, is that financial stocks, so banking in all its forms, retail banking, investment banking, all of that, anything in the traditional banking world, so not necessarily asset management or those kinds of other financial fields. So many people have noticed that those banking sectors have declined particularly steeply, whether before the most recent oil dispute or definitely today as well. We saw that the largest energy sector ETF, XLE, was down about 20% by the end of the day. Um, the biggest financial sector ETF, XLF, was down the most out of, I believe, pretty much any other sector, down about 10 to 11% or so. Of course, during the day, this all fluctuated quite a bit, but the reason that financials will decline particularly fast due to disruptions in other sectors, and particularly energy, is because banks that are in the business of lending, underwriting, and all these other financial functions will see a significant decrease in revenue when those um, other related sectors experience their own volatility. For example, in the case of lending, when energy sector stocks go down, that means those companies have greater default risk due to varied cash flows, lower revenues, lower earnings, and that increases the risk for a lot of banks. They're going to experience more defaults. For many loan portfolios, even a few defaults can absolutely disrupt a loan portfolio, and definitely when it's a broad scale sector decline like that. I mean, we can remember from in the 2008 mortgage crisis how it was just a moderate number of defaults in mortgages that cascaded and resulted in the rest of the wheels collapsing. So that's why the financial sector has declined in conjunction with the energy sector, because the energy sector is such a big place for activity, for bonds, for projects. Think about a oil project, right? Has to take a lot of financing before it even produces one drop of supply or energy or revenue. Um, and so these are very heavy sectors um, for finance. And with the broader decline as well, we see it too, because when businesses in general decline, I've always seen finance in a way as the nexus of capitalism. And so when other sectors begin slowing down, experiencing disruptions, downturns, the financial sector as the core of like where all that money is connected and made and analyzed and extracted from, that sector begins to hurt as well. And so we'll see how the markets keep on going amid all this. But in the meantime, happy trading out there.